Before we get into the episode, a quick reminder that this podcast is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Now for a word from Onramp. Onramp is a Bitcoin asset management platform built on multi-institution custody. Leveraging our partnerships with industry veterans BitGo and CoinCover, Onramp's multi-institution custody is a segregated vault, requiring 2 of 3 institutions at any point in time to sign once a client's unique permissions have been met. Our industry-leading best-in-class approach to custody helps individuals and institutions secure new and existing Bitcoin positions. All keys are held in deep cold storage and kept 100% offline, managed with institutional-grade security best practices. The custody solution eliminates single points of failure and reduces counterparty risks, ensuring maximum security and peace of mind. Onramp's suite of products includes our custody offering, a spot Bitcoin fund, private wealth services and inheritance planning, and managed wealth for advisors. Whether you're new to Bitcoin or a veteran in the space, we would love to connect with you to understand your needs and how we can serve you. Please visit our website at onrampbitcoin.com, where you can schedule a consultation and connect directly with our team.
What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Gentlemen, we're on the last trade, and we just had the last trade of Bitcoin without an ETF. Today's the first day of the ETF. There's your corny opening for the week.
It's good. It's all good.
Dave and Larry, we're pumped to have you here. Is this a momentous occasion? That's the big question.
Yeah.
Yeah.
No. Once you see it, there's $100 trillion, depending upon who's measuring what you're measuring. Let's say there's conservatively $40 to $100 trillion of RIA money that couldn't buy a Trezor and couldn't buy GBTC and couldn't buy Bitcoin in any other form, that now has the ability to just click a button and buy Bitcoin. I mean, paper Bitcoin, admittedly, but it's not the same as holding your own keys. But, assuming the auditors are not corrupt, you're actually buying Bitcoin with one of these things.
So you're saying of maybe 100 trillion, now there's suddenly demand to get maybe a 1% allocation into an asset class that is currently $1 trillion. What's the marginal impact of that?
Well, and it's better than that, Jesse, because as we all know, $1 trillion asset class today, 70% of that are what we would consider to be pretty damn strong hands that haven't moved their coin for over a year, or maybe in some cases 2. So they're really bidding on, let's call it 300 billion of what I would call tradable coin today. Soon to be in April to be growing at 0.8% per year, and now growing at 1.5% per year. I think people are going to be shocked. I mean, I think Samson might be onto something here. We'll have to see.
I think the other thing is, you look at like a Galaxy, obviously a real smart group of people there that are estimating 13 to 40 billion dollars of ETF inflows over the next 3 years. Like, that just sounds too light to me, like way too light when you think about, all sorts of things, like we're all getting caught up in the flows and ETFs, but what no one's talking about in the last 5 days that I see is this whole macro backdrop, which I'm sure we'll get into, that might have a black swan event that then catalyzes real movements into this asset class. And so the good news is the on-ramps to this asset class for those RIAs that used to do the traditional 60-40 equity bonds, if we ever get a real upside down bond market, the on-ramps to this asset class got really easy. So I don't know. I don't want to be hyperbolic, but I thought Galaxy was way too conservative in that. And to Larry's point, if there's $1 trillion at a minimum over the next few years chasing an asset class of call it 300 billion, as he's saying, of call it a third of the Bitcoin market cap. But look, I just, it's unbelievable kind of how much demand over supply this will be, and then we could even get into the scarcity and the halving and all that. So it's all a lot of interesting things happening.
Well, not only the macroeconomic landscape that's a tailwind behind this right now, but what does the ETF, BlackRock coming in, Galaxy, Valkyrie, ARK, the 11 ETFs getting approved, what does that do for FOMO from other types of large investors? Like I wrote this in the newsletter last night. How many nation states does this send a light bulb off in their minds? Like, oh, maybe we should get Bitcoin. Like that's a whole slug of capital that I don't think people are even talking about. Everybody's hyper-focused on the RIA market, the institutional capital. But what does this do for other layers of the hierarchy of big capital allocators?
Yep.
Yeah, I mean, you think of the sovereign wealth funds that probably haven't really embraced it, in the Middle East and other places. I mean, other than El Salvador, there hasn't really been another country to embrace it. None of the big corporations have embraced it other than, MicroStrategy. There's just not enough coin to go around at these kind of prices. And I think people are going to be shocked at, the prices that emerge as a result of that fact. I mean, I can't see how we're not at 100,000 soon and 2 to 500 within a year or two. I mean, maybe less, but certainly, within a year or two.
Yeah, pretty incredible recent stat from MicroStrategy's recent buying spree. They purchased 35% of all the coins mined in the last quarter.
Right.
And that's a company that's a $10 billion market cap company. That's the 1,500th biggest company in the world.
Right.
That's small potatoes, really.
Right. And he's not stopping,
Yeah. And now who's joining him it's Larry, it's your old classmates, people who run, BlackRock and other large TradFi firms who suddenly have a vested interest in getting their clients to think that Bitcoin should be part of their portfolio.
Hey, Larry, you know who else isn't stopping? None of us, none of the people listening on the pod. I've, a lot of times I'm sure we've all experienced this in regular world or like Bitcoin world where you go full circle. Once you get educated, you kind of like end up back at like the meta level of, oh, this is like good for me, or this was like good for Bitcoin. And I had this realization we've been talking about. I think we all agree here these products are inferior to holding spot in various forms or fashions. But I had this idea of like, man, this is a trap, and all the things associated with what happened to GBTC, independent of like government intervention, just the fact that the Bitcoin, is sitting somewhere where you can't take delivery of. But then I had the realization, it's like, we look at this space so long, we've been looking at it so long that we think about it in the terms of like our allocations versus what a traditional individual that is sane, for all intents and purposes, it's a like 1 to 3% alternative asset that's sprinkled on top of their 60-40. And my hope is, and I think this is what we've seen play out, is as you get educated with that 1-3%, whether it's somebody buying on Cash App, buying a little through a river, or looking at it through their brokerage account, you start to actually pay attention to like, what is this thing I'm buying? What am I doing? And then you learn about its properties. And that's why I think like this is always long-term bullish for the asset, its underlying fundamentals and companies building the right way, because over time that kind of like cream rises to the top of, oh, wait, I don't want this all 30, 40, 50% sitting with Coinbase or BlackRock. And that's really where, companies building the right way step in. So
one thing we know to be true is that investors chase performance. And I mean, we were up 150 some odd % last year, and I suspect this year is going to be as good or better. And I mean, I was at the gym this morning with a guy who just, was kicking himself for missing the $15,000 buy opportunity. And his logic was that, well, I thought when FTX blew up, that was it. All this shit was going away. And I said, well, you didn't do the time to differentiate this from FTX. And he said, well, what about Ethereum? There are use cases there. And I said, okay, maybe, but the monetary policy there is totally flawed. And I noticed this morning they were talking about another 33% dilution in the Ethereum base. So, and this is a guy who's a very sophisticated money manager. He knows what he's doing, so to speak. I mean, he's not a Bitcoiner, but I bet she's becoming one. So, and there's just going to be a lot of that. I mean, it goes back to, how early we all have been and how, people have painted us as being crazy. And yet what we've really seen was quite logical, and we knew we weren't crazy. We were just early.
And that brings up a good question. Is this the crossing the chasm moment for Bitcoin? I think that's been a big topic of discussion. And is this the inflection point that really thrust Bitcoin to a level where there's no going back? We're sort of leaving the early adopters phase into mainstream adoption over the next 3 to 5 years.
It feels that way to me. I mean, if you that model, Malcolm Gladwell's model, says when you get as many years as it takes to get to 10%, it takes the same number to get to 90%. And it's hard to know where we're at, but it would strike me that we might be at 10%. Maybe we're a tad lower. I'm not sure. But boy, this sure opens it up to everybody, and it just makes it super easy,
Absolutely. So I think it's way earlier than 10%, and that's where the numbers come in. It's kind of hard to believe them, really, but you can look on chain at how many addresses have 0.1 Bitcoin in them, right? So that at this point, that's $5,000, and that might be too high of a bar at this point. So maybe we should lower it, but that's the easy cutoff to see on chain. There's 4 million addresses with 0.1 Bitcoin in them, which is to say there's at most 4 million people in the world who have saved in an address they control $5,000 worth of Bitcoin.
To be completely fair though, Jesse, there are some addresses. There's some people who own it in Coinbase or Gemini or other pieces. I mean, you're right. Yep. That's 4 million self-custodied people who own 1/10 of a coin or more.
Right.
They're probably in all those brokerage accounts. What I would guess, what did Coinbase say their customer count was, like 15 million, 20 million? I mean, there've got to be 20, 30 million brokerage accounts as well that have some, right? And we don't know how much, but
absolutely. And then it becomes it's a bit fuzzy there of like, where do you draw the line on what is adoption?
Right.
And I think you can make the argument, and I've made it in the past, that if you really understand Bitcoin, you will have used the network to secure some amount.
Right.
To have
that's right.
A little bit
deep understanding. There are 4 million people with deep understanding. I agree with that.
Exactly. And so that's a high bar, but that's 0.05% of people in the world. Like that's how low we're talking.
I actually would push back. I think it's 1/10 of whatever you guys just agreed on, the 4 million. I think what the measure is material wealth. Because material wealth basically signals you've looked long enough to at least say, if it's on Coinbase and it evaporates, or understand it. Because a lot of people just have accounts with $100 or $1,000 or 4,000. I think material wealth, i.e. over 10% of a single person's personal account or portfolio, is less than 400,000 people globally.
No.
Wow.
I find that hard to believe.
Jesse, you've done some work like a year ago on some of that, right? Trying to figure out that was good data you had.
Yeah, I triangulated that. The best source we have is the ledger. That's the only transparent data that we have out there, and that's where that 4 million addresses comes from. And it's been ticking up nicely over the last 4 years. That went from 3 million to 4 million. So more people are adopting, and despite the fact that in dollar terms has gone from $1,000 to now $5,000 to meet that 0.1 Bitcoin bar. That number is going up. And then from there, you have to triangulate like what percent of people have, understand Bitcoin, have meaningfully saved in Bitcoin, but they've done it in GBTC, despite understanding Bitcoin and realizing that they probably shouldn't just have GBTC. And then there, it's kind of your classic, back of the envelope consultant math to come up with something. But the hard and fast numbers are on the ledger, and that's where it's kind of incredible how early it is. If you look at just those numbers, which really reflect like deep level of understanding of Bitcoin, it is so early that that's no surprise. There's only one Michael Saylor, doing this with the corporate balance sheet. There's only one El Salvador so far. We're just so early still.
as I recall, I mean, apologize if I'm wrong, but I thought one of the conclusions that I remember reading your analysis was that if we counted people with 10,000 US dollars of net worth in the world, it was well less than 1% of the global population had exposure to Bitcoin. Is that something like that?
Yeah. I was using a data source that said that 2 billion people in the world have a net worth of $10,000. And so that, to me, is realistically the market for who's going to be interested in savings technology. And right. Bitcoin is a savings technology. And so of that number, 4 million of 2 billion is 0.5% right. of that group has, or sorry, less than 0.5%. That's that 0.05% number because, sorry, that other direction.
I'm putting you on the spot.
Putting you on the spot. Yeah, that's 0.2% of that group, which, however way you cut it, it's incredibly small.
Go
ahead, Michael.
Larry and David, I'd be curious, like, you guys have backgrounds in, TradFi, you've seen the markets, like, what has been your dispose or kind of like thoughts around how stuff starts getting a little weird? Like I was, pinging some people before pre-trading started, right? And you're looking at 25% up. It's like, did they buy that Bitcoin? They had to buy the Bitcoin because nobody's going to take that risk. But like, you're looking at markets that trade within certain time frames. You have a 24 days a week, 24 hours a day, 7 days a week, global asset. Like, walk us through kind of your understanding, or at least to the extent you do have it, just the market structure from the authorized participants to the shares and like where things can get dislocated. I don't have that background, but it feels like it's not going to be clean long-term as these things start to mature that we're talking about and demand increases. And so I'd be curious if you guys have any thoughts on all that.
Go ahead, Dave.
Well, yeah, I mean, I don't know, Michael, it's funny, like Larry and I actually had a conversation yesterday about that I'll get to that in a sec, but I woke up in the middle of the night thinking about this, like, I think back to the Facebook IPO from 12 years ago or whatever it was. And I don't know if you go back and look at a stock chart, actually I could share the screen if you want and pull it up, but, basically, well, I won't bother, but if you look back at the Facebook IPO, the thing kind of moonshotted up the first few hours and then bang, the next 3 months absolutely got cut in half, down 50%. And it was the classic, like, well, there you go. It was too much hype going into it. Institutions sold to retail, thing creators. And so, having touched the stove like that in markets over years, you get nervous when you see this hype and build up to this ETF and whether it's going to be 40 billion and, of inflows over how long will it be and where will the price go? It just naturally gets me nervous in the short run. But in the medium term, we look at kind of those flows we talked about and just how early we are in terms of global adoption, like Jesse's just talking about, and just how easy the on-ramps are now for your regular folk RIA to do these portfolio construction analysis now to realize that better risk-adjusted returns happen to your portfolio if you get away from an old 60-40 equity bonds and you start adding in Bitcoin. Oh, by the way, Mr. Jones, you can buy, this ETF and own some Bitcoin and have that portfolio. Like, this just becomes this virtual positive feedback loop over the next 6 to 9 to 12 months of money coming in and those ETFs forced to go and turn around and buy Bitcoin. And suddenly you just get this virtual feedback loop. So it feels highly probable that while there is some risk that this has gotten overhyped and people could get disappointed 7 days from now because the money isn't as flowing in as fast, I do think that over 6 to 9 to 12 months, as Larry was saying earlier, the money's going to flow in. And then we haven't even got into a black swan event, which again, we'll get into macro, I'm sure, but eventually you're going to have people running to inflation hedge assets when the money supply of the Fed begins flowing again. And Lori Logan, who I think is one of the Dallas Fed chairs, probably one of the most important people to listen to. She's the one who was the big architect around all of the programs from 2020 that the Fed used to go throw money in the system. And here she is saying over the weekend, 4 days ago, that it might be time to stop with QT. She's seeing some of the issues in the repo market and reverse repo market. And so I'm being long-winded, but to land the plane, we just see more high probability of positive catalysts for Bitcoin and flows of capital and macro backdrop that I think that, as Marty's asking about too, an inflection point, I think we will look back at this as a key inflection point. And in the Zen philosophy too, I think we'll look back and say that Sam Bankman-Fried might have been one of the best blessings ever for Bitcoin, because it began to teach the global markets about the difference between Bitcoin and crypto. And Gary Gensler and the SEC helped to kind of further educate that through processes like this. So let me pause there, but obviously we're excited.
Let me add a few things, Michael. So I think the job of these guys is to make the price of their product, their ETF, track the price of the coin, one for one with as little slippage as possible. And so I'm guessing, I don't know this for a fact, but I'm just guessing based on how these things typically work, that they've got, internal algorithms designed to kind of instantly buy. As they get more flows in, they get more purchases. They attract money into their, into their bucket. They literally have to instantaneously turn around and buy the coin, because if they don't, the coin does a God candle, it goes up 10,000. Well, then they're going to slip. They're not going to, at the end of the year, somebody's going to measure how they did against the coin, and they don't want to have a lot of slippage, if any. And so I think it's going to really be kind of one for one. They see new flow in, they instantly buy coin. Where it gets interesting is, of course, they close down at 4 p.m. because the market shuts. And so what happens if a God candle happens overnight? Well, everyone who's in it already participates, but you can't go buy the ETF, in the middle of the night. And so, but that's fine. In the morning, the new price opens up and you want to bring new money in, fine, bring it in, and you're paying the higher price now. So I think that it'll actually be, if they do it right, and I presume they will. And another thing, two other comments I'd want to make. One is that some people say, well, this is going to be paper Bitcoin, this, that, and the other. Look, we know who we're dealing with here, and I've dealt with the gold guys for 30 years, so I know how good they are at screwing around with this shit. But I think that in this particular case, there are going to be auditors involved. And so for these people to, take money in and not buy the coin, i.e. create paper Bitcoin, I think is going to be a problem unless they can find a corrupt auditor, which is possible, but I wouldn't rate it as highly likely. So I think that it's not going to be paper Bitcoin. And there's nothing in the filings and all that. And so I want to move to the GLD, which is the gold ETF, which is very similar to these things and create a lot of the problems over in the gold space. But, in that particular ETF filing, there are all kinds of outs where they could have custodians and sub-custodians. They could buy paper gold. They could have futures contracts. And of course, one of the things that a lot of us who looked at that thing said is, these guys are buying paper gold from Lehman Brothers. And if Lehman Brothers fails, the gold's not going to get delivered. And these don't have any of that language in the ETF filing. So I think they've actually got to legitimately buy the coins. Final point, Nico on Twitter had it this morning, a really great chart, and I retweeted it. I don't know if you guys have the ability to pull it up, but it shows basically when the gold ETF was approved in 2004, and then what happened to the gold price between 2004 and 2011. And it was pretty substantial, the appreciation in gold. So, people weren't going out and buying gold coins. That was a pain in the ass in the early 2000s, to go to people just didn't do it. But suddenly, ETF arrives, you can buy a gold proxy. Turns out it was quite flawed, but you can still buy a gold proxy. There you go. And, look at that, right? What was that? November of 2004, the first, GLD ETF comes out. Boom. And so, will this repeat exactly? Probably not. But I think the trend is pretty indicative of what's going on. So we're incredibly bulled up on this whole thing. I mean, and Saylor is too, right? I mean, he's one of the smartest guys, if not the smartest guy in the space. And he just said, folks, this is a once in a generation opportunity to front run a lot of money that wants to own this shit but can't because of the structure. Your typical RIA cannot own Bitcoin or could not own Bitcoin until today. And so that's the news story here. And I think we're now in uncharted waters. And, Samson Mao says he thinks it's going to $1 million. I mean, who am I to say he's not right? I mean, I mean, I'm not sure I'd bet on it for sure, but I mean, obviously, I think it's getting to 1 million eventually. But what's the time frame? I don't know. It could be faster than we think. So those are kind of my thoughts on how it's working.
And anchoring back to the analog of Facebook's IPO that you explained, Dave, like that's people have been calling the ETF launch the IPO moment for Bitcoin, but like we all know, and there's exchanges that trade 24/7, 365. Like the difference here is that Facebook going public has a bunch of insiders that want to liquidate some of their stock to monetize all the work they've put in for many years. And I think this is a different animal in the sense that everybody that's bought in has bought in just because of what Larry just explained, that you have the chance to front run immense amounts of capital. And I don't think those dynamics of like an IPO launch, insiders dump is going to play out, and things are going to get really weird.
Yeah, I think it's a great point, Marty, that in that case of Facebook, you had institutions selling to retail that then the mom and pop got held holding the bag. Now, look, to be clear, Facebook went down 50% in the next 3 months. It was one of the most phenomenal buying opportunities. It's up literally like 100x from there. And so, I think that similar thing, I'm just saying, could play out in the short run where, I think you're it just feels like the markets broadly in the last 2 months since the Halloween bottom has had a little levered speculator, Citadel type trend following investor pop in the markets, right? And ignoring now global economy. And so I'm just saying that, and partly because I'm hoping I'd actually like to see Bitcoin settle back in and then be able to keep adding and just buying more. Now, like you guys, we're always dollar cost averaging, and ultimately it won't matter. We'll look back someday on these prices and say, God, what a bargain this was at 48,000. But I think you're right, Marty, I agree that the irony is we're selling to mom and pop retail on that Facebook IPO. This is the exact opposite. This is now the IPO of Bitcoin, as you're saying, but for the institutions now to start getting involved. And all of us that have been here for a while now, we're kind of riding that wave. We front ran them, as Larry's saying. So, yeah, no, I think this is in general. Let me be clear on the medium to longer term. Like as Larry said, we couldn't be more bullish. I mean, this is really a huge catalyst to allow anyone in the world to buy it. And the beauty of this asset class is anyone in the world can buy it so long as you have a mobile phone. And one last final point. This guy was just listening to someone overnight was making this point that, if 50% of the world is supposed to have CBDCs thrown upon them in the next year, again, in that spirit of that Zen philosophy of if Sam Bankman-Fried might have ended up being the best thing that happened to Bitcoin to create that delineation between crypto and Bitcoin. Same thing here. Maybe these CBDCs, as this gentleman was pointing out, creates a tutelage for people in the world to understand how to trade digital cash, and therefore the eventual run away from fiat currencies to Bitcoin become that much easier, that they're doing a favor for Bitcoin ultimately by introducing CBDC. So, again, I don't want to get too philosophical on that, but sometimes the things that you think are so bad aren't. They're actually really good.
And that, I mean, I just saw a stat on Twitter. We're an hour into the trading day. There's $1.7 billion of volume across these 11 ETFs. How many new Bitcoin, maybe not Bitcoiners as we would define them as people holding their own keys, but how many new people have material exposure over $10,000 to Bitcoin today? Yeah. That's how many did we just add?
It looks like there's been 600 million in billion in GBTC as well, right?
Yeah.
No,
and that counted in that.
So there was an interesting tweet the other day that said, "Can you say you're early if you got in after the ETF?" We joke around being so early. I think that, like, to your crossing the chasm point, it's kind of like it's a mainstream. It's as mainstream as you can get from an
Yeah, it's absolutely a new era. But yeah, to that crossing the chasm point, weirdly, I still think that is way in the future for us. We're still in, based on the numbers I was talking about, firmly in the innovators stage. It just feels like we've come so far, because we have. But the next 15 years will be going through the steep part of the S curve, the adoption S curve. And Larry, I was just reflecting on, that chart you brought up about gold was an amazing one to show the power of adding a channel of buying power to an asset. But the big difference, you've already pointed out and done a great job of highlighting how Bitcoin's more auditable, and that creates this barrier to the paper Bitcoin problem. But on top of that, gold has kind of historically been the domain of nation states, right? Like it has such a long history that it has become so centralized over time. And Bitcoin, doesn't have any nation states hoarding it at all yet. And so it's kind of hard to, who has the authority to meddle in a paper gold market and muddy the waters? Really only nation states are able to do that and get away with it, I think, or with the blessing of nation states at least. And there's in order to muddy the waters, you have to control some of the supply,
Right.
or at least be a player in that market. And there's no nation state player in Bitcoin yet, so I think that's an additional barrier to effectively.
I would agree with that. Yeah, I would agree with that. I mean, I would also assume that the on-chain analytics people will be able to see and figure out. I mean, look, we just figured out earlier, there's over, the BlackRock Trust is already, to date, what are we, open a couple of hours now, has already bought $400 million worth of Bitcoin. You can't hide that. That's, there've got to be some on-chain transactions going on. Somebody's going to be able to figure out where they are. Now, they can kind of keep adding addresses and doing different stuff, and I'm sure they will, to try and mask what they're doing as much as they can. But, there's a bunch of great people who do on-chain analytics that are going to be able to, I think, look through and see some of this shit. And you can never do that with gold. I mean, the gold is just completely opaque. And frankly, I think a lot of people, a lot of the nation states lie about the gold. I mean, I think, the United States is supposed to have 261 million ounces or 8,133 tons. And I don't think we do. I mean, Ron Paul told me personally, he's pretty sure that Fort Knox is empty. So, and I can't dispute that. This is a much better mechanism all around.
Can we talk about Franklin Templeton putting laser eyes on Benjamin Franklin? Is that does that mean we won, or what is?
Close. There's so many great things that are coming out of this. So the other one I love is the Valkyrie guys deciding to name their ticker symbols Burr. I mean, how great is that? Right? About trolling these guys, I mean, there's just a lot of good stuff. And then of course, yesterday's debacle. How about the SEC not having a 2FA, check on their website? I mean,
it's poetic. It's poetic. Yeah, it's beautifully poetic.
It's just clown world all over the place. And maybe it's a good chance to move into kind of the other side of the macro piece, which David and I are writing our fourth quarter letter about.
Thanks for tuning in. If you're interested in exploring any of these topics further, or want to learn more about how we can help you secure a new or existing Bitcoin allocation, get in touch with our team at onrampbitcoin.com. We look forward to supporting you on your Bitcoin journey.
The December numbers just came out, and the December U.S. federal deficit is 20%, up 20% year over year. So for the quarter ended December, the U.S. ran a 500, round numbers, 510, I think, $500 billion deficit. And the first quarter is typically small. So that would imply, compared to the others, so that would imply that, for the year, next year, we're going to be over 2 trillion. We were 1.7 last year. Would have been more, but the student debt thing got turned around. But anyway, a $2 trillion deficit in a theoretically healthy economy, with 34 trillion of debt. We think that, and our letter talks about this, we think that what happened last week, or I should say maybe now 2 weeks ago, is before, Powell pivoted on the 13th, but before that, You know, the U.S. Treasury bond melted down 20% in September, October, and the 10-year went over 5%. And we think that set off alarm bells. And that's what led to them all coming out and saying, no, we're probably done with this rate hike cycle. And it brought the 10-year back in, and it created liquidity in a lot of areas, which they needed to do because, you know, something was breaking. And our view is they're right on the edge of something breaking, and we don't know when it will formally break and break in size. But, you know, Silicon Valley Bank was an example of something breaking. They stuffed that one back in the can. But they're going to, you know, something is going to break here. And if you read, you know, the zero hedge premium stuff, I mean, you know, as David was alluding to, you know, Lori Logan and the basis trade, and, you know, there's a lot. It's pretty complicated stuff, but there are a lot of indicators that would suggest that the monetary plumbing is getting really messed up, and that things are quite tight, and that they're already starting to loosen. And I was surprised. We were surprised by this morning's CPI report. We thought they'd have it rigged to come in low, and it didn't. It kind of came in slightly hot, and that's not going to help them. But we think that they don't want to pivot because Powell doesn't want to be Arthur Burns, but we think they're actually being forced to pivot because of the U.S. federal government interest expense and how much of the budget it's chewing up. If they don't get those short-term rates down out of that 5% range, you know, they're gonna run into a complete, you know, bond market disaster. And so our view is that they will declare, whether they have it or not, they're going to declare victory on inflation and start, you know, unwinding QT and or dropping interest rates. Even though they say they're not, you know, they also said they weren't even thinking about raising, and they said inflation was transitory, and, you know, they consistently lie and are wrong. And, you know, at the end of the day, their number one mandate is keeping the system functioning. And it seems to us that there are a lot of clues that suggest that the system is close to not functioning. And by the way, gold and Bitcoin smell it, right? I mean, that's why Bitcoin was up 150 last year. Gold was up 13 or 14% last year. I mean, you know, in a very negative real interest rate environment, you know, in a positive real interest rate environment, or close to positive real interest rate environment, where they've really raised aggressively, you know, these two sound monetary assets have done pretty well. And we think that's only set to continue. And it's, you know, to us, it's a matter of when, not if. And we think the when is probably sometime in this year, 2024.
Yeah, I ran a left side of the bell curve analysis last week. And at the end of 2008, the ratio of national debt to N2 money stock was 1.29, and today it's 1.63. So we've expanded the debt way more than we have the monetary base. And as Parker Lewis likes to say, there's too much debt and not enough dollars. So you just think, again, left side of the bell curve, looking at that ratio, they're going to have to revert back to the mean by expanding the monetary base.
Yeah, this is Lynn's famous chart. It's just, you've got to have the monetary base go up in concert with the debt, or else the whole thing blows up. You know, so it's coming, and, you know, that's enormous. That's a macro event that's enormously positive for sound money assets, just enormously positive. But they've held it off. I mean, I give them credit. I thought it was all over with Silicon Valley Bank, and they managed to stuff that one back in the can.
But if and when a crisis hits and they have to unleash the monetary spigot, that will ensure that Fed will be Arthur Burns in this.
Oh, absolutely. There's no question. That's where they're headed.
Yeah.
Although, you know, there are some, I mean, Gunlock and others, who say we could get some low inflation prints. I mean, David has done the research and pointed out that, you know, some of the housing stuff has come in a lot. I mean, the food was a problem in today's report, but the housing and other things have gotten a lot softer. And honestly, I mean, the difficulty in navigating all of this is we're dealing with numbers that are, you know, they're cooked. I mean, that are, you know, they lie about all this shit. So it's fuzzy at best, right?
Exactly. You know, housing's 38% of the housing and rent, owner's equivalent rent is like 38% of the CPI. And just looking at kind of where those numbers are trending here over the next few months because of the lag effects, like, we're definitely good. Despite today's surprise in CPI, the number is going to keep working its way down. It's most highly probable that it will play out that way. And so, you know, but, you know, I think that we're talking about is more just that bigger issue. I mean, like, I think probably there's some black swans out there that no one in the world, even none of us are even thinking about, that could pop up. But I think the biggest thing that I'm hearing that, a lot of major Wall Street banks worry about is, when does one of these treasury auction things really go afoul? And then suddenly you get what we witnessed kind of early fall this year with the 10-year moving toward 5%. When do you see that happening throughout the curve, even in the T-bills? And suddenly now people start losing real faith in the bond market. Again, that's why I think this ETF is a big deal, because I think then it's going to be really easy for the RIAs to say, maybe you should go buy some of that Bitcoin ETF, Mr. Jones, and with 2% of your bonds, and we'll see just an easy flow out. That's probably when the Treasury will be mad as hell that Gensler allowed these on-ramps to happen so easily. So,
hey, Larry, and you mentioned cooking the numbers. One of the stats that rung out to me I saw early in the week was from Peter St. Onge about why are GDP, like we keep being confounded about like what's happening, why are the numbers what they are, and it doesn't make sense in like anecdotal references. And he tweeted GDP and jobs define slowdown predictions ? Because most new jobs, 56% last year, were disguised as government spending. In New York and Chicago or Illinois, it was 113% in Illinois and 121% in New York. Wow. So while the economy is shrinking, government spending, government expenditures. When I heard that early in the week, it was a little. I mean, it's kind of scary in the sense of like you're at this like tail end of this cycle where the government is basically taking up over 100% of jobs in these two states, and how many are below that, right on that cusp. He just threw out those two numbers.
Yeah, and the government has never been a bigger percentage of the economy, except World War II, where it was a huge percent. And that'll be in our quarterly report as well, which we're in the process of finishing up. But one of the things that we found interesting, and people wonder, the biggest surprise to us last year was the stock market held together, and the GDP held together, kind of grew at, I don't know, call it a 2.7% rate annualized. And the thing that we found, a chart that we put in our report that we thought was very interesting, which shows that, in COVID, the spending kind of took a real quantum jump up. Government spending was in the mid fours and went to 6+ and 7 actually in 1 year. $1 trillion, we're talking about U.S. federal government spending. And of course, now the COVID crisis has passed by a couple of years, and yet we've only come down from that peak of 7 to 6.1. So, what's really keeping the economy going is, Bidenomics and this inflation control plan and all these government programs that they're out there spending on, and money they're sending around everywhere. And so, and of course, they're doing it all with debt. They don't have that money. They just, we're borrowing it. So, we've kind of got a fake economy and fake GDP numbers based on, the borrowing. And, something's got to give, right? Either they've got to stop borrowing so much and try and close that deficit, or worse things will happen in terms of, people will lose faith in the currency. I mean, the way to go back to the inflation point, the dollar has been very weak, and understandably so, because of, this tilt toward easing. And I think that's going to continue. And where I think it all becomes relevant is eventually the dollar will weaken enough that the dollar price of oil will go back up again. We've been kind of hanging around in this 70, 80 range. And when that starts to happen, that'll be the beginning of the next upwave in inflation. But that might be, 3 months, 6 months, 9 months from now, who knows? And the final point would be that it's an election year. And I saw somebody tweet out, I don't know how accurate it was, it could be wrong, but that there was actually discussion going on in Washington, D.C. about some kind of a tax break this year in an election year to try and grease the skids for the election, which it would just be shocking to me. I mean, they absolutely positively need to get more fiscally responsible, and yet you see almost nothing in that direction. And of course, they kicked the can on the whole debt ceiling. It doesn't have to get addressed now until January of 2025. So, they can kind of do whatever they want between now and then. And my sense is they will. And that's why I think a deficit this year of $2 trillion, that's the low end of the range. I think it could easily be 2.2, 2.4, 2.6, maybe even 3, who knows? But, in an election year, they're going to pull out all the stops, right?
And if we keep the pace of Q4 2023, it could hit $38 trillion by 2025.
Oh, easily. Yeah. Oh, that's exactly right. That's another thing we discovered, and I wish maybe somebody smarter than we are in terms of government accounting. There might be some intergovernment accounts, but they had a deficit last year of 1.7 trillion. But if you look at the debt at the beginning of the year and you look at the debt at the end of the year, the difference is more like 2.5. So there's something like 6, 7, 8 trillion, $800 billion. It's not I mean, the debt's going up. The deficit's either the deficit's underreported or there's some kind of funny accounting going on. But yeah, I mean, and if you look at the OMB reports, I mean, they were saying maybe we'd get to 38, $40 trillion in 2027 or something. Well, hell no, we're going to, as you point out, Marty, we're going to be there next year. We're going to be there at the end of next year. We'll be at 38 probably.
And all of this stuff manifests itself in the real world. Like, we were remiss to not talk about like the degradation of like products and services in society. We talk a lot about it here and other individuals, but you can see material effects of like products and services being delivered. And the most recent, it's not funny, but it kind of is in like complex systems. This was it Delta, the airplane, like the
Boeing 737, they're blowing up. Yeah, they're falling apart, right?
Yeah, exactly.
And I think another landmine from the macro backdrop that we haven't discussed yet is just the geopolitical situation in the world. What's going on in the Red Sea right now?
Right.
A lot of the BRICS countries becoming emboldened and sort of banding together and not being happy with U.S. foreign policy. You have the Red Sea Coalition, which is a Western-led coalition in the Red Sea that has no allies that are actually in countries that border the Red Sea. I think the only one that's involved may be Oman. I could be wrong, but we're really trying to expand our influence and doing it pretty sloppily right now. And you can see this debt situation, the election year, and the geopolitical situation forming for a perfect storm of a shit show that could just really bite the U.S. in the ass.
Oh, absolutely. Yeah, no, and it's interesting. Everyone's kind of ignoring all that stuff, right? That's not even on the radar screen right now for a lot of people. Everyone's thinking about just the election and the economy. And yeah, we could easily have a black swan in some other country or at a larger level. Interestingly, China though has been having a lot of troubles, and I saw some data that shows that they're printing like crazy too. I mean, in fact, I think it was Preston who had a really good chart on global M2, or maybe it was Incrementum, that showed that, in spite of the Fed tightening and the US M2 actually declining at a global level, it really hasn't dipped all that much. And this isn't uncommon. I mean, all these central banks, like one guy will get tighter and then the other guys will loosen to compensate for it, right? And that's not uncommon.
Yeah, and I keep coming back to how the history of rate hike cycles, they hike, they pause, and then 10 months after the last hike, they start cutting. And everybody is excited that, oh, okay, great, we're gonna see relief now. Markets will boom, but they tend to start cutting because they know that the system can't take it anymore.
Exactly right. Yeah, no, they're cutting because things are broken and very bad, and they've generally always gone too far. And
right.
Yeah, David's got a great chart on this. I don't know, maybe you can pull it up. It shows.
Let me share my screen. I don't know, is this working, guys? Can you see it? This Bloomberg chart?
Logan's got it.
We're still seeing it. There you go. Yeah.
So, yeah, I mean, it's exactly that point Jesse just made, that this is going back just 50 years, right? The white line is the federal funds rate. The red shades are recessions, going back to 1970 here. We put in the blue line, the S&P 500, and gold as the sound money proxy here over 50 years. And the key thing to look at is look at the white line that looked from left to right, going back to the 70s. Every time they jack the federal funds rate, invariably there's a pause at the top. And so if we look at, good, you can just see the arrow here. Like look at, let's just stop here kind of in 99, 2000, right when they raised rates in late 99, 2000. Then there's a pause, and then the recession lag effect kicks in of the higher rates, and the stock market begins to break kind of in the later phases of the pause. That same thing happened with Bernanke here in 2004, trying to pop the housing bubble. He paused for a year. Stock market had its blow off top before then the recession kicks in. The stock market falls over, and then they have to cut rates rapidly to try and steady the economy in this levered, fragile economy. And I think that even happened here in 17 and 18 with Powell takes the baton from Yellen as the Fed chair. He tries to, end some of the shenanigans and pauses, but then everything was breaking down in the repo market. We had the December of 18 stock market collapse, and they stopped that. And then obviously COVID happened. But look here, I mean, here's this rapid increase of the last year and change, and here's our pause. And yet the stock market's marching on, the economy ignoring all sorts of geopolitical risk. But our view is that there's definitely a high probability of maybe the soft landing thing doesn't play out like Yellen's been skating with a Stanley Cup on, and a recession ensues, stock market begins to collapse, and then all your Luke Gromen theory of now deficits really expand, and the Fed is forced to kind of really not only cut rates but do a lot more QE. Here we go again. I mean, that's that macro catalyst we were talking about that could absolutely begin to moonshot Bitcoin rapidly at that point in time. But yeah, I think. Go ahead.
And then you get the
one of those pauses. Gold did extremely well, and gold was the proxy for Bitcoin in the olden days.
Right.
And it, that would cause the repeat of the 70s, the inflation spike, and then it seems like it's coming down. Oh, turns out you got to do a lot of stimulus, and then you have an even bigger second wave of inflation.
No, that's exactly right. They're always behind the curve, and they really don't know what they're doing. And this is why, we should never have had a central bank. I mean, they started off, they blew a bubble, they financed World War I. We had the mini depression of 1920, and we had the big depression of 29. I mean, it's just, these guys just do it over and over again. I mean, I tweeted a week ago, Bernanke, pours gasoline on his neighbor's house and then lights it on fire, and then calls the fire department and writes a book and claims he's the hero with the courage to act. I mean, what the fuck? I mean, these guys just keep doing it over and over and over again, which I actually thought was interesting. In the last Powell press conference, he said something I thought was interesting, where he said, that they were willing to start cutting before headline inflation got to 2%, because there's a lag effect. And it was like the first time I ever heard him, talk about a lag effect. And then, it implied that maybe he's thinking of trying to get ahead of this curve, knowing what's coming. But we'll see. He does not want to be perceived as Burns, and yet I don't really see how he can avoid it. I mean, the reason we're all so comfortable in our investment theses over a longer time frame is just that the math is what it is. And, one can't continue to grow the debts in excess of the underlying money supply without having eventually you hit a hard wall. And so as a result, we know with, as Foss used to say or says, fiat debasement is 100% certainty. It's just how much and what time frame. So it's coming. And, the good news is, we'll have $1 million Bitcoin. The bad news is we might also have $70 gasoline. We'll have to see.
Larry, how do you perceive, or how does your guys' network perceive what's happening? We know some friends mutually that introduced us, and you guys made it through. And I think recognizing gold's value early helped with that. But just curious, kind of like the scene up in Boston, the Northeast. You guys been around the rim.
It's kind of amazing how well fiat has treated so many people. I mean, David's got a brother who has a very fiat job and very high level position. And, fiat's been really good to a lot of people. And so they don't really want to recognize or that they might be wrong, or that they might be on the wrong side of this trade. It kind of threatens their worldview. We do have one SMA client who was a fiat guy I used to work with in the venture business, and then he went off and he did extremely well, and he's probably worth $500 million. And he gets it. He completely gets it. But I would say he's the exception, not the rule. I think the rule, in the neighborhoods that David and I live with, the people our kids played sports with, et cetera, is that, what are you guys talking about? Everything's great. We're rich. We just bought a new Land Rover. We make a ton of money. But it's all going to change. It's the first shall be last is what I think, and can't happen soon enough from my point of view. It's been a long time coming. I mean, as you guys all know, I've been fighting this battle long before Bitcoin existed. So, which gives me the perspective to know that we are right, and to also understand that there are times when it's a shitty battle to be fighting.
Yeah.
I've been pleasantly surprised with the Bitcoin price this year. And, we have Bitcoin in the fund, we have Bitcoin companies in the fund. I'm personally, half my personal assets are in Bitcoin, but the other half are in gold and silver. And I must admit, the gold and silver side is driving me nuts. It's like, come on, guys, let's get going here. And David and I were discussing this yesterday. I mean, there's no doubt that Bitcoin is taking some of the shine away from gold and silver. I mean, gold and silver market's about $13 trillion, but really only probably 3 or 4 trillion of that is tradable. There's a lot of it's on, women's necks and jewelry in India and China, and maybe 25% of it's in central banks. That's not, they're adding, but they're not selling, but that's not up for sale on any given day. So let's call it $4 trillion on any given day of tradable gold coins and bullion in the world, absent the paper. And at the margin, Bitcoin's $1 trillion of total market cap. And, they're young people, they're not buying any gold, they're buying Bitcoin instead. So while I think they will both appreciate, as you guys have heard me say, there's no doubt Bitcoin's the much faster horse. And I think gold will eventually become much less important in the entire sound money trade. But I also think that with the central banks doing what they're doing and the buying and the potential for a reset occurring, which I think is reasonably high, that those people will probably try to reset to gold before they try to reset to Bitcoin.
And one of the most exciting points of all this, we touched on it a little bit, is Wall Street's going to get a nice surprise in that they may think they get their bearings in the next couple, and everybody globally, the next, let's call it 90 days. Jesse's version of the Super Bowl is, set to happen, I think right now, like April 16th or whatever. And they're just going to get smacked in the face with this supply shock, and the reflexivity is going to come from that. I don't think they're prepared for.
I think that's right. Super Bowl. Yeah, imagine what happens if we wake up one day and Bitcoin's $300,000. I mean, think of the FOMO that's going to exist. And I mean, now you're a wealthy human being anywhere in the world, and somebody says, where are you on Bitcoin? I mean, you got to seriously start to think about it, right?
I joke around that when that happens, it obviously ties in our product and thesis, but I think people throw their keys out of the window. They become so nuclear. They're like, oh my God, get this amount of capital out of anything that I can actually touch. I don't think we're prepared for it when that price gets to where it is, the amount of it's going to be a very different world. 300K BTC.
When you say throw the keys out, what do you mean? In other words, they're going to be just a ton of buyers coming into it? Or?
No, I mean, right now we sit I would say, fairly confident in our custody situation. We feel good, wherever it is, solid. When that price hits 90K will be one thing, but $300,000, I don't think our brains, when he thinks about like in my personal setup or thinking about, I was talking yesterday, I had a lot of conversations, was about even if I lost it all right now, I feel like I can make it back. I can make the money back, but you imagine a 10X from here and you lose all of that, you're like, I can't ever make this back. There's no coming back from, and that reality of well, what do you do with the asset? It's just a different calculus on how you protect something versus how we think about it today. I don't think it's actually just priced into anybody, let alone people that have been looking at the asset for 10 years, let alone the future buyers. It's just a different world. The gravity will completely change at 300K basically.
Yeah. I mean, it's hard to, thinking about how far it can go. I mean, and I love Saylor's comment, it's going up forever, Laura, and I think he's right. But I mean, to me, I can see a couple 100,000. That's clearly, within that's to me, that's falling off a log. We get there in whatever time frame, but we'll get there. And I can actually see 1 million. After that, I just don't know. I mean, I've seen 50 million a coin, and Carlos Sari said that. I've seen 10, 20, who knows? It's nuts, right? You don't really know.
Well, I was going to say one data point we've looked at historically is in the late 1970s, call it 79, 80, after that whole inflationary and chaotic period of the 70s, you had global sound money assets, gold and silver at that time. If we just isolated those two, it basically got to high single digits as a percentage of global financial assets. And so if you take gold, silver, and Bitcoin today and say, okay, what percentage of global financial assets are those? We're under 1%. And so again, in the world in the 1970s, you only had 35% debt to GDP. You didn't have 125% like you do today. This is a much more fragile system now than it was then. And so, when we do the math on that and say, okay, well, what if you just went back to 8% of global financial assets on Bitcoin, gold, and silver? It's pretty easy to get to prices like 400, 500,000 a coin in Bitcoin, and having gold and silver go a hell of a lot higher as well. But that's where that math's pretty easy to see if over the next 5 years. I think the one thing that people have to remember is, I think we live in a microwave world where we're used to having our food in 15 seconds. And I think people think, well, okay, Bitcoin will be at 400,000 by December of this year. But these things take time. And, Michael, you're asking about the Boston crowd. And I'd say, what I would say the soccer mom, soccer dad test that I see is everyone's in this fiat world, like Larry's saying, like, hey, the stock market works. These 12 central bankers seem to have the market. What's the Fed going to do to save us this time? And it scares the hell out of all of us, because we know we've studied this in financial history enough to know, like, God, this is not going to end well. But I think what happens is Jeremy Grantham, a great value investor up here in Boston, has pointed out that commodities are where the great fortunes are made, and Bitcoin is a commodity, and it's the scarcest commodity in the world. And if you knew, and if you just have an 8-year patient, low time preference horizon, you'll make fortunes here, given this backdrop of where we are as a percentage of global financial assets, these inflows that are coming, how commodities work, what the global central banks are going to have to do to support the global economy, the demographic challenges with baby boomers maturing, things like that. You can't kick the can much anymore. And so, like, this to us seems just like the highest probability. Like, I can't imagine any other asset outperforming Bitcoin over the next 10 years. Or even maybe 5 years than this asset class, given the scarcity properties and given that backdrop. So, like, I think everyone, to answer your question, Michael, is just, too caught up in their stock market 40-year-old model world of the Fed's got your back and rates come down, but they're not watching all these other trends that we're all early on.
It's amazing to me how well the average investor has been trained to buy the dip, because in 40 years of deflation, it basically has always worked. And, that's the advantage of being 66. And you see a bunch of cycles, and it's as if bear markets have been outlawed or something. Bear markets and stocks have been outlawed. You know what I mean? And that's just not realistic. I mean, you're going to have labor cost pressures, you're going to have falling margins, you're going to have falling demand, and you're going to have tighter money, and you're going to have better alternatives. I mean, I know many wealthy people who are like, why do I need to mess with the stock market? I can buy a 1-month treasury and get 5%. 5% is a nice yield on all the money I've got. So, and by the way, I think that 5% is going to go higher, and I think the 10-year is going to go higher. I mean, I think the other big macro thing we haven't really discussed, but we feel it very strong, is that we are no longer in a deflationary world. We're just not. I mean, there are deflationary aspects of the world, as Jeff Booth points out, the technology and so forth. But right now, we've underinvested in real stuff for 40 years, and real stuff is about to come back with a vengeance. And so, that's gonna change what works in the stock market. I mean, the stock market in the 70s was a bad place to be. The bond market in the 70s was a terrible place to be. I mean, Henry Kaufman called them certificates of confiscation. And, we think this is the 70s on steroids. So, to me, the biggest decision everybody's got to make right now is they look at their asset allocation, how much they want in stocks, how much they want in bonds, and then how much they want in what we consider sound money assets. And, we talk to people all the time that have nothing in the sound money asset bucket, and we scream at them that they're idiots. And of course, we've got 100% in the sound money, bucket, and probably we're idiots too for being so overweight in one category. But we believe what we believe, and it's pretty clear to us. What's that?
Irresponsibly long.
We are in a business school sense. We're extremely irresponsibly long. My HBS professors would criticize me massively, but you know what? I mean, I just don't give a fuck anymore.
He probably should buy some Bitcoin just in case it catches on.
Yeah, well, David and I were at a macro conference up there, and I mean, you want to be the turd in the punch bowl. You just talk about Bitcoin, or you talk about a sovereign debt crisis. I mean, you got to remember. I mean, and that's what leaves these people vulnerable. By the way, you got to remember just how fat, happy, and stupid all these fiat masters are. I mean, they think they're geniuses. They think they're absolute geniuses. And to be fair, they have been. I mean, they've crushed us. I mean, it's playing that game has been an extremely lucrative game to play. But history would suggest that things are changing. So that's how we see it.
They're changing, and they're changing rapidly right now. ETF is here.
As Marty says, we're going to win, right, Marty?
Oh, we're going to win. These, just look at the state.
There are days,
There are days, there are weeks, there are months sometimes during the bear markets where your spirits get low.
Sometimes it doesn't always feel fun. I mean, it's really nice to be at this landmark where this ETF got approved, but, kind of the run up to it was just like, oh, really? We're going to have to go through all this shit again.
It's behind us now. Now we're in the winning phase. We're always winning.
Yeah.
Dave and Larry, it's been a pleasure. I wish we had more than an hour to talk, but
likewise.
It was great to have you two on today. Momentous day. Whether you think getting Bitcoin exposure via the ETF is right or wrong, there's nothing you can do about it. It's in the world now. People are going to buy it, and it seems like there's a lot of people buying it right now.
It's a good thing. There's no way it's anything but a good thing. It does open the door to possible games, but I think it'll be harder to game this than it was to game gold, and so I think that's a good thing.
Awesome.
Great.
Thanks,
Jesse,
Jen.
anything?
Thanks, guys. Good to see you.
Yeah, fantastic. Dave and Larry, thanks for joining us. Let's do this again when the crisis really hits.
Yes.
Yeah, that'll happen, and some rivet's going to pop, and it's going to be, March of 2020 or 2019 all over again. It's coming. We just don't know when.
Yeah, we'll talk about whatever acronym they come up with to plug the hole.
Yeah, I'm sure they've got a few figured out. Yeah.
BTFP2. It's coming.
Yeah, exactly. Thanks, guys. Good to see you all.
Thanks, guys.
All right. See you guys next week.